Oh, how's everybody doing? Man, it is December 10th. We had the FOMC meeting today. We're going to break down all the details there. Obviously, no big surprises as far as the rate cut that took place, but we're going to talk about some of the statements that were made, what we can expect looking forward, and what that means as far as potential QE. Is it really QE? We're seeing a lot of mixed posts across X. Also, going to be talking about some FUD that's been going around about MicroStrategy. What does that look like? We're going to diffuse some of that as well as a critical date coming up. Things are going to come to a head here. So things we need to be aware of there as well. Trump's been talking recently about eliminating income tax with tariff revenue. I'm going to break down the math behind that and what is possible and what isn't possible. We're going to talk a little bit about some deep end updates, look at some charts, and cover some other things as well in the prediction markets. So very exciting live stream plan here. Won't be as long as the one yesterday. I was on for quite a while last night, but let's dig in. Hopefully everyone's having a fantastic evening, or I guess morning, depending on where you are in the world. Okay, well, let's start off with the key takeaways from today in the Fed meeting. So they did end up lowering rates by 0.25%. This is what was expected. It's obviously the last FOMC meeting of the year. At this point, now, these are the big highlights looking forward, and this is what we are kind of waiting to see. The FOMC is penciling in just 1/4 point reduction next year. And 3 officials actually see higher rates in 2026. The economic projections say that the officials boosted their GDP forecast. That's good. They lowered inflation expectations. No surprise there. We haven't seen the inflation everyone was so worried about earlier this year. And they predicted unemployment will remain at 4.4% next year. So we are seeing unemployment numbers kind of getting a little bit brutal recently. Well, I would say we're seeing the layoffs. We're seeing a lot of things crack. Hasn't really shown up in the numbers quite yet. We don't really have all the full numbers, though, because the government shut down. And it does say that this is the first time since 2019 that 3 committee members dissented. Of course, we've seen 2 dissent the last couple of times. So key takeaways there. Now, the thing that's been going around is, a lot of people talking about how QE has started. So let's break that down a little bit and exactly what this means. So this is the official statement from the Fed. It says the FOMC, Federal Open Market Committee, directed the open market trading desk and the Federal Reserve Bank of New York to increase system open market account security holdings to maintain an ample level of reserves through purchases in the secondary market of Treasury bills, or if needed, of Treasury securities with remaining maturities of 3 years or less. And this is what a lot of people are kind of grasping onto here. Seen a lot of people posting about this. It goes on to say here, the total amount of RMPs, which are these reserve management purchases, we'll talk more about that in a minute, of approximately $40 billion in Treasury bills will happen monthly. So this is going to actually begin. These purchases will start on December 12th, so in just 2 days. The desk anticipates that the pace of RMPs will remain elevated for a few months to offset expected large increases in non-reserve liabilities in April. It does say that it will be significantly reduced after that. So that's the big question. Is this really QE or not? So let's take a look at this SOMA here, this system open market account holdings, okay, of domestic securities. So it says here, the Federal Reserve System open market account contains dollar-denominated assets acquired through open market operations. This is what they're talking about adding to here. These securities serve several purposes. Collateral for U.S. currency in circulation to other liabilities on the Federal Reserve System's balance sheet. It's a tool for the Federal Reserve's management of reserve balances and a tool for achieving the Federal Reserve's macroeconomic objectives. You can see here, this is what they're talking about, adding to the T-bills in notes. Okay, so what does that all mean? I found a good breakdown here. And I read into this quite a bit to kind of fully grasp what's going on. And I think this does the best job I could find of framing what this all actually means, because we're seeing a lot of different people are all of a sudden, experts on what RMPs are, which most of them probably didn't know what they were yesterday. Okay, so it's predictable excitement on X tonight, particularly from the crypto world. This is from this WOSS crypto account. So unfortunately, RMPs aren't, as the name suggests, a return to QE. It's a different tool for different purposes. So QE, or quantitative easing, of course, involves large-scale purchases of a longer-term treasuries and mortgage-backed securities to lower long-term interest rates. So if you're buying 20-year, 30-year bonds, that demand will then lower rates. Okay, this is not what's happening right now. It says that it does stimulate lending and support the economy during crises. Generally, when rates are near zero, at least historically, not from this high of a baseline. Goes on to say here, RMPs, which is what they announced today, are a technical adjustment following the end of quantitative tightening, which we just saw end. What was that, on December 1st, I believe? I have to look back at the exact date, but we did see QT end. They're designated to prevent reserves from falling too low, similar to normal central bank liquidity management, rather than provide broad economic stimulus like QE. Okay, so it is different. There will likely be a positive net effect on liquidity, and this might be good for risk on bulls, but in this is sort of mixed levels of big buts. So a big but. Liquidity hasn't been a constraint this year, and it has been net positive from a global perspective since at least April, arguably December 24th. Okay, so yeah, we have seen that. That is true. Global M2 has been expanding. We have seen some liquidity constraints, though, for sure, in our banking system and, of course, in crypto following October 10th and what took place there. But I think these are the bigger takeaways here. The bigger headwind is monetary policy, and this, in my opinion, was still a hawkish cut, even if a little less so than expected. So again, they signified, being hawkish, that we're not likely to see many more cuts, at least while Jerome Powell's in his position. And his position is up in May. He said, I still want to see the updated dot plots, but given we'll be just about at what was the terminal rate average of the previous data set, he said, I wouldn't be surprised if we don't see another cut in Powell's tenure. So it is worth noting there's 3 more FOMC meetings under Powell before he's out in May. Anyway, lots of excitement, and I think misplaced this early on first read through. Perhaps more hopeful than a few days ago, but I remain cautious for now, if still risk on, other than crypto, where I've been out since 106. He's been out since Bitcoin's at 106. So what he's saying, as far as looking forward, is pretty true if you look at Polymarket. Right now, you look at the next meeting in January 28th, the likelihood of no change is at about 79%. You look at March, no change, 61%. So a higher likelihood of a rate cut there, but overwhelmingly, we're looking at 61% of no change. This actually went up 9% today after the meeting. And looking out to April, same type of situation there. So those are the next 3 meetings. Those will still be under Jerome Powell. Obviously, after that, I think, if Kevin Hassett does take over, I've covered that quite a bit. It is very likely he'll be cutting rates pretty aggressively. Wouldn't be surprised if we see QE. And also, he is a crypto bull. So those would obviously be good things looking at the second half of next year. But, at least in the intermediate and short time frame, I think we need to be aware of this information. Now, the thing I'm really paying attention to here is the overnight repurchase agreement. This is basically our bank pulling liquidity, short-term liquidity. We're seeing that there's been some liquidity issues in our banking system. If we zoom in here, they've had to pull several times here. This is just recently. Going back to Halloween, October 31st, $29.4 billion. We've seen this time and time again recently. Now, I bring this up because we saw a similar trend, albeit much bigger, back in 2019 into 2020. So I think this is what we need to keep an eye on. Do we continue to see stress in our banking system? And I bring that up because when this peaked here in March of 2020, that is really what led to the massive QE that began. So could this be something that we see over the coming months, potentially? Of course, that peaked in March of 2020, and then we saw, this is the total assets or the balance sheet for the Fed here. We saw a massive amount of QE where they pumped about $5 trillion into the market. So, I would say we expected the quarter point cut, the 40 billion monthly. That's the purchasing of T-bills that's going to take place. Not exactly QE. Okay. I know a lot of people are saying that it is liquidity, so that's a good thing. But I think we're going to have to wait a little bit longer before we see any massive liquidity injections. Now, if that does change, well, that would probably mean that we have bigger things to worry about potentially. If they have to speed up the process, that would mean that maybe the labor market's really cracking or the economy is totally screwed. So we'll see. We'll see how this plays out. I thought this was an interesting take, though, by Peter Schiff, which obviously major gold bull. Don't always agree with a lot of his takes, but in this case, I think it has some credence. I said QE by any other name is still inflation, which is true. I mean, we see that when they print money and inject it, we see inflation. The Fed just announced it will be buying T-bills on an ongoing basis. So T-bills, by the way, are any treasury with a duration of a year or less. Okay. You start going longer term, like to bonds. Those are your treasury bonds, right? So that would be, your 20, 30-year bonds. It says, given that long-term rates will rise on this inflationary policy shift, so if they're buying T-bills, and that's not demand on our longer term duration bonds, that would likely increase longer term rates if we don't have demand on those. It won't be long, it says, before the Fed expands and extends QE 5 to longer dated maturities. So in other words, if we start to see the 10, the 20, the 30-year yields tick up here, the Fed is going to have no choice but to start to buy up those securities, those treasuries, to try to push yields down. We are refinancing we have a lot of debt, guys. A lot is rolling over next year, and this is a big concern. The interest payments we're making on that debt are massive. And that's one of the big things that, Powell and Trump have talked about a lot, is getting those yields down so we don't have to pay so much interest. They're using T-bills, short-term debt, a lot. That's where I think we're going to see the stablecoin issuers have to buy up T-bills. That's going to be new demand. We've got the SLR, supplemental leverage ratio, changing soon. So as of January, banks are going to be able to hold a lot more treasuries. That should push down yields as well. But looking at the longer term duration ones, I think Peter Schiff is right here. We could start to see actual QE taking place if we start to see yields move up. And that'll be something to really keep an eye on. If we look at the 10-year, it is down slightly, ticked up a little bit here. And same thing with the 30-year. So we'll see, man. We'll see what happens. If we start seeing these yields start to really move up, I think that'll be a telling sign that we could see QE starting up, like Peter Schiff said in his post there. This is what Trump had to say about it. We all know he's not a huge fan of Jerome Powell.
The market should go up, and we should keep driving it up and have it keep going up and let it be much, much bigger, much, much better. And, growth doesn't mean inflation. They're always afraid that, we have, and if there is inflation, that's okay, then we can slow it down. But we should be able to do a lot better than 3 and 4. We're scheduled to be at 4%, which is pretty amazing because we have a deadhead Fed hair. This guy, the head of the Federal Reserve, is a stiff. And, you fight that. It's amazing. We fight that, and yet interest rates are going down, except with him, not too much. He did a rather, I would say, a rather small number that could have been doubled, at least doubled. And that's the other thing. I think the rates for the United States are always the lowest in the world, because without us, there is no world. Without this economy, there's no world. You know, you could go to some of these wonderful countries that you think are so great. Well, one of the reasons they're great is because we allow.
Okay. Well, some fiery comments there. There's a lot to take out of those comments. Obviously, he wanted Powell to cut rates more aggressively. Guys, the thing that people need to realize, though, is by cutting rates, that doesn't mean that the 30-year yield mortgage rates are going to come down. Like, we still need demand on the longer term duration bonds. We're seeing that China has been selling a bit. I mean, overall, though, like UK has been adding, Japan holds a lot of our debt. But we still need demand there, and that's where QE could kick in, and we could end up buying up some of that, creating some demand by printing money and forcing those yields down. So just, cutting rates doesn't solve the whole equation there. But he says we should be near zero. The whole rest of the world needs us. I mean, we are the biggest economy. We like to spend a lot of money. But as I covered yesterday, and I'll break this out and post it in on X probably tomorrow or the next day. But BRICS is talking about launching a new currency that's 40% backed by gold. So we'll see. We'll see what comes of all that. Let's see. We have a comment here. Somewhat dovish, Powell. I think he's a little bit more dovish than people expected, for sure. A labor market will cause a cut in January. Yeah, I mean, we're going to get labor numbers, and I think they could be a lot worse than people are expecting, and that could force their hand potentially. We'll see. We'll see how the markets react to that, of course. But right now, we don't really have complete data. I will say this, though. And this is something I brought up yesterday. The last FOMC meetings, so a couple of these were no changes in the rate at all. These last two were rate cuts here. All of them caused a decrease in the price of Bitcoin after those meetings. The more recent meetings where we actually did cut had larger retracements, 8% here, 12% here. So we'll see. It's something to keep an eye on over the coming days and weeks as far as the price of Bitcoin goes. And one other thing I will call out here, back in 2008, the Great Recession, we started cutting rates. They do say the Fed tends to be late. Generally, I mean, this is generally true. You're cutting rates for a reason. It's because there's weakness in the economy, weakness in the job markets. You're cutting to stimulate growth. And just the opposite, right? When you're raising rates, that's to generally fight inflation. Things are overheated. And that's exactly what we saw, right? We saw this with the COVID spending. We dropped rates to zero. We printed a ton of money, trillions of dollars, caused inflation. We jacked up rates to fight inflation. But of course, that has on the other end of the spectrum, really bad implications on the economy, on the job market. We've been seeing a lot of layoffs. We've been in this period of heightened, rates. Now they're starting to cut. Now, always the question is, are they too late? So we'll see how this all plays out. But the last time they did start cutting rates, we did see the recession. Obviously, that's also when QE started. So QE is not like something that's been around forever. It's something that we created back after the 2008 recession in order to stimulate the economy. And then we kept rates near zero for a very extended period after that. So not a whole lot of history to go off of here. But, it is something to call out for sure. Not to be a Debbie Downer, guys. All right. What else do we have here? Let's talk about the reports recently that Trump's talking about eliminating income tax. Well, I'm going to talk about how plausible that is and how the math might check out here. But here's a clip from Trump talking about just that.
Time goes by over the next 2, 3, 4 years, those numbers are going to go up. And I believe that at some point in the not too distant future, you won't even have income tax to pay because the money we're taking in is so great, it's so enormous that you're not going to have income tax to pay. And
so he's talking about having enough tariff revenue that it'll offset all income taxes. So let's look at the math behind this, guys. This is the amount of tax revenue year to year from income taxes. So this last year, 2024, we brought in about $2.4 trillion. It's also worth noting, by the way, that of the total of 4.9 trillion, we're spending like 7 trillion. So we're spending far more than we're bringing in taxes anyway. But all things considered, let's just talk about what he's talking about doing here. 2.4 trillion is the total amount. Well, in essence, for this to work, he would have to bring in $2.4 trillion a year in tariff revenue, right, to make that math work. If you look at what's expected, near term in 2026, 200 to 250 billion is what they're anticipating as far as tariff revenue. So obviously a far cry from $2.4 trillion. If you look at the more recently, we did bring in 37.5 billion in October alone, but we'd still be far short of bringing in enough to offset all of income taxes. Looking a little bit further out, as things stabilize, 220 up to as much as $280 billion a year. Okay, so if we do some math here, though, I looked at, what about if you limited it to households that were making $100,000 or less? If you look at that part of the population, they pay about 12.9% of all taxes. The numbers actually start to work there. So if you take, 12.9% of the 2.4 trillion, it brings us around 300 billion. Let's say, we do hit that 280 billion in tariff revenue. It's plausible. Okay. I'm not saying that this is going to happen, but I think the math does start to check out if you start to look at some alternative options here. I thought this was kind of interesting, though. The 1%, top 1% pay over 40% of the total taxes in the country. That's pretty wild. Obviously, they also make far more. Okay, so that makes sense. But for all this talk, some people are saying he's going to do it. Other people are saying there's no way, he's a liar, blah, blah, blah. Some math that checks out somewhere in between. That said, he's already talking about spending tariff revenue in a lot of other ways. This news dropped. I haven't seen it covered too much, but as you know, our soybean farmers have been facing some tough times this year with tariffs. China cut off purchases from our soybean farmers, which is our biggest agricultural export, by the way. And it was part of their tactic, for negotiations. They are buying again, but, because of the downtime where they weren't buying, our farmers in a really bad spot. So they did just announce, the Trump administration, that they are going to be doing a $12 billion one-time payment to farmers to help them through this trying time. Obviously, then things should pick back up next year. So this is not going to be an ongoing payment. And then the other thing he's been throwing around is the tariff checks next summer, going into the midterms. And depending on how they would structure that, if they limited it to adults under 100,000, of course, the amount they're throwing around is $2,000 per check. It could range. The cost of this can range anywhere from $300 billion to as much as $600 billion, depending on how they structure and how many individuals this would go out to. So, you start doing some math here. All these things he's talking about happening, the tariff revenue is not going to be able to account for all of that. So I think we're going to have to pick and choose how that money might be spent. But, let's say he chooses one, you can't actually make the math check out a little bit. So it's interesting to look at. That's for sure. I wouldn't be surprised if we do see some sort of check go out next summer, especially with the midterms coming up next fall. I think Trump and the Republicans realize, especially after we just saw for the first time in 30 years, the mayor of Miami that was just elected as a Democrat. That has been, again, over 30 years since that's happened. I would imagine the Republicans are scrambling a little bit right now ahead of the midterms next year. All right. And some other news. This just broke earlier. U.S. military has seized an oil tanker off Venezuela's coast. So this broke a couple hours ago. He said, Trump said, as you probably know, we've seized a tanker on the coast of Venezuela. Went on to say the biggest, most Trump thing you've ever heard. Large tanker, very large. Largest one ever seized, actually. Wish I could do a better Trump voice, but I can't. He said, we keep it, I guess. I don't know. So kind of ridiculous. Bondi went on to say here, for multiple years, the oil tanker has been sanctioned by the United States due to its involvement in illicit oil shipping network supporting foreign terrorist organizations. Of course, the thing that we need to keep an eye on here is this going to end up being a war? Are we going to have military engagement? You know what? This might actually not, after this news just broke, might not be something horrible to bet on. Let's see if it updated at all. No engagement, 76%. It was at 79%. Still 76% chance of no engagement in 2025. So we'll see if anything comes of that. Speaking of, predict across this account today called Bullpen. So this is the ability to trade on chain your positions in prediction markets. There might be other ones out there. I'm not positive, but this is one that I definitely am keeping an eye on. If you look here, this person has easy access, and not just him, Ansem. Ansem is a big following, has been using this as well. So if you open up positions in prediction markets, you can essentially sell your positions before that everything's settled. So I did go ahead and if you look at Polymarket here, you have to join the wait list. So I did go ahead and join the wait list. Again, that is the website there is, I think, bullpen.fi. So maybe something to keep an eye on there. Prediction markets are going to be absolutely massive, guys. Some other crypto news. Japan's top financial sector regulator, the Financial Services Agency, is planning new rules that will require digital asset exchanges in the country to maintain liability reserves to protect customers against losses resulting from hacks and security breaches. So it says here the security reserve amounts are still under review, but the proposed new rules are reportedly expected to follow similar lines to those already in place for traditional securities firms. So, of course, it's for crypto assets, which are required to hold ranging from 2 billion yen to 40 billion yen, or in other words, $12.7 million to $255 million. So, if you guys remember, Japan was also where Mt. Gox happened, the biggest Bitcoin exchange hack at the time, it says. There are 800,000 Bitcoin that were lost in that hack. They're still sorting that all out. That was back in 2014. But it does say that in order to make the transition to the new framework more palatable for the exchanges in question, the FSA is also reportedly considering allowing them to purchase insurance rather than holding full cash reserves. So that's lovely. I would like to see more protections for consumers. We see all these freaking hacks. Anytime you have, centralized, entities that are, custodying these assets, it's a concern, man. We've seen it time and time again where people have lost their assets. So I think it is good to have at least them have insurance to protect you. And some other news, we've talked a lot about the different regulation and bills that are being passed for crypto. This Keith Self posted this. He said, I've submitted an amendment to add a central bank digital currency ban to the NDAA. So there was the stablecoin bill that was passed earlier this year. There were some promises made that they were going to be banning CBDCs. They didn't apparently follow through with those promises. So he says here, promises were broken to include this language in this NDAA, National Defense Authorization Act. So I did look a little bit further into this. It says a new debate has begun in Washington today after U.S. lawmaker Keith Self revealed that he has formally submitted an amendment to add a ban on CBDC, central bank digital currencies, to this upcoming National Defense Authorization Act. He says that promises were not kept, which is why he's taking matters into his own hands. So he revealed that he has formally submitted an amendment titled Anti-CBDC Surveillance State to the National Defense Authorization Act that goes beyond just banning the digital dollar. So he says it aims to stop the Federal Reserve from creating, testing, or supporting any digital asset that works like a CBDC, even under a different name. So, the government is a little sneaky. They might try to say it's not a CBDC. However, the proposal also blocks Federal Reserve banks from offering accounts or financial service directly to individuals. Just going to say here that Self said the move was needed because lawmakers were promised a CBDC ban, but it was later removed. So that's a little shady. The whole issue here says the CBDC issue has caused frustration among several Republican lawmakers. They believe, and I agree with this, A government-backed digital currency could allow authorities to track spending, limit purchases, or control how people use their money. And I'll tell you what, under the last administration, they were testing CBDCs with all of our biggest banks. So that depending, I don't care how you feel about, Trump winning the election, that is certainly a positive that did not happen, because they would be able to see your assets at any point in time. Some scary shit, man. So we do not want CBDCs. I am in full support of banning them for sure. Let's talk a little bit about some of the FUD we've seen around MicroStrategy. One of the things is that if their MNAV falls below 1, they're going to sell $64 billion of Bitcoin. So I think this does a good job of explaining and kind of putting some of that to bed.
It's absolutely true. There's this meta in crypto Twitter, in the broader traditional media, that MicroStrategy will be forced to sell its Bitcoin. And I think it's such simplistic thinking. The thinking is MicroStrategy has debt, and it's used it to buy an interest that generates no cash flow. And eventually that doesn't work. Like, sure, that's true if you stretch it to infinity. But the thing about debt is you can actually look at it. And when you actually look at it, here's what you see. Every year, MicroStrategy has to pay $800 million in interest. It's sitting on $1.4 billion in cash. Therefore, it has plenty of cash for the next 18 months. Okay, that's literally invalid for as far as the market can discount. The second is it has $8 billion in debt against $60 billion in Bitcoin. For starters, that's not very much debt against a lot of Bitcoin. But then if you look at the actual debt, none of it comes due until 2027. And in 2027, $1 billion of debt comes due. It will have to either refinance or pay that down. But the idea that it's going to have to sell $60 billion of Bitcoin, there's just no world in which that's true unless Bitcoin falls 90%. And if Bitcoin falls 90%, we're not worried about MicroStrategy, right? We're all looking for other jobs. So I just think it's from a data perspective, just strictly untrue that it will be forced to sell its Bitcoin. There's not a world in which that will happen.
So for all the people that are posting, MicroStrategy is going to sell their Bitcoin and be forced to sell, blah, 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 blah. Guys, it's not true. There's been a lot of FUD recently, though, around MicroStrategy. Another thing that's been going around is that the MSCI is looking to delist MicroStrategy. So I want to go through the details about this. So it says here, a billionaire tech leader, of course, Michael Saylor, led Bitcoin treasury firm MicroStrategy, now Strategy, has finally written to Morgan Stanley Capital International, MSCI, over the potential exclusion from the MSCI USA index. Okay, so this is what the details basically. So this was first reported by JP Morgan Chase last month that Strategy risks getting delisted from major equity indices, including the MSCI USA index. So the MSCI USA index is a popular stock market benchmark that tracks the performance of large cap and mid cap US companies, representing about 85% of the US stock market. So it says here, Strategy's net asset value, MNAV, a metric that calculates the ratio of enterprise value to Bitcoin per share value, has veered toward 1x. It means the company's stock is now trading almost exactly at the value of its Bitcoin holdings with a negligible premium. Okay, if we look at their actual MNAV right now, which is taking their enterprise value divided by their Bitcoin reserve value, they are at a 1.15 right now. So yeah, okay, they're not at 1. Their underlying assets, their enterprise value still does exceed the Bitcoin that they're holding. So let's go back to this. It says the MSCI has been mulling whether public companies with more than 50% of their assets on their balance sheets dedicated to digital assets should make it to traditional stock indexes. So that's their whole thing. If you have more than 50% of your value attributed to the crypto you're holding, they're saying you should be removed from traditional stock indexes. It goes ahead. If it goes ahead with the plan, Strategy would be the first casualty of the index reevaluation. So just today, Strategy founder Michael Saylor shared a letter written on behalf of Strategy to the members of the MSCI Equity Index Committee, in which the company called the proposal to exclude companies with balance sheets consisting of more than 50% digital assets misguided. And here is the actual proposal he sent over, the letter he sent over. Says that, MSCI proposed to exclude digital asset treasuries, like we just talked about. DATs are operating companies, not investment funds. He also goes on to say the proposal's digital asset specific 50% threshold is arbitrary, discriminatory, and unworkable. The proposal improperly injects policy considerations into indexing. The proposal conflicts with U.S. policy and would stifle innovation. We ask MSCI to revoke its proposal. Please voice your support. He goes on from there. Okay. So here are the dates that matter. We're right now in the consultation phase. December 31st is when the consultation closes. January 15th is when they will make a final decision on this. February 2026 is when it would be implemented if approved. And the delisting would, of course, potentially cause some FUD and sell-offs. Okay, so this is important to keep an eye on for sure. Let's hope that they withdraw on this after that letter that they submitted today. But that's all the MicroStrategy FUD I got for you. I think the biggest thing I'm excited about here says this guy, Dan, he has a really solid account. He has a really solid YouTube channel too, by the way. I recommend following him. He talks about a lot of the macro stuff I do, actually. I watch some of his videos and I'm like, yeah, I talked about that yesterday. Crypto bulls want a leg up and leverage longs promptly get liquidated. Just another day for exchanges. Goes on to say the Clarity Act will put an end to this abuse and these manipulation tactics. We've seen a lot of this, guys. Pumping the price up when we have low liquidity to get, flush out the longs, and they drop it back down to flush out the shorts. I think since October 10th happened, a lot of market makers got really messed up, and we've just seen them trying to flush leverage ever since to make some of these market makers. Clarity Act should clean up a lot of that. Okay. And that's the one thing that I think a lot of us are waiting for, because it's been pretty brutal, man. And the market manipulation sucks right now. 75% chance of it happening next year. Just a 6% chance by the end of this year. Of course, I talked about this yesterday. They are getting some final revisions in. The hope is that this thing can get passed and on Trump's desk early next year. So that would be fantastic news if that's the case. I'm sure the market makers will try to squeeze as much out as they can before that gets passed. So that might be part of what we're seeing as well. Let's look at some charts. Guys, silver is absolutely crushing it. We broke through. Go back here. Actually, let's go to the daily. Or let me go to weekly, because this term trend line just loads. Silver has been absolutely crushing it, man. It had a multi-decade trend line that it broke recently. So it's right around this section right here. I won't draw the trend line. But anyway, it's one that we had all the way back in like the 70s. We had the same all-time high that we hit there. That was the resistance. We finally broke through, and we've been off to the races, guys. This is one that I've been covering all year. I have positions in silver, and I would not be surprised if, not to say we won't have any pullbacks, but I wouldn't be surprised if this thing continues to climb. Now sitting at $62.30. Absolutely bananas. I mean, we were at $11.57 back in 2020, but even earlier this year, let's see here. We're sitting at $26, man. We're up over 100% this year on silver. Crazy. I think precious metals will continue to run. If we look at Bitcoin, where we are right now, just under 92,000. The key level, and we keep running up to this right here, is right around that 93.5 to 94 range. This looking at the 4-hour chart, we cannot break through and reclaim. This is critical, because looking further back on the longer term time frame, the last time we had a downtrend, this is what we broke out, turned into support. We have just been butting up to this. We've wicked above it. We haven't been able to close above. And this is what we continue to see here. So that's the level to really pay attention to. This is such a critical level. We wicked above it. We wicked above it again, but we continue to close below. So we'll see what happens. I mean, it's just a matter of time, I think, that we do break above. But, man, ever since October 10th, liquidity has been a little bit weak. We haven't seen any sustained rallies. I think that will normalize. It's just taking a little bit of time. We need to remember that washout on October 10th was 9 times larger than any liquidation event we've ever seen in crypto. I mean, even 9 times worse than what we saw, back with, FTX. The other big thing, and I've been covering this a lot, is the Russell 2000. Today, we finally saw the Russell 2000 break out to new all-time highs. It looks like we are sustaining that potentially. And if we see a breakout there, that's really, really good for risk on assets. I've brought this up a couple of times, but you look at Bitcoin, the Russell 2000. The Russell 2000, of course, is a bunch of lower cap stocks, which we haven't seen. I mean, we've seen really the Mag 7, Mag 8 hold up the market a lot this year. We haven't seen small caps do all that well. I think now that QT is ending, I think we're going to start seeing liquidity push into markets. We're seeing deregulation is going to be a big trend next year around the Trump administration, starting with our banks in January. I believe we will start to see the Russell 2000 breakout. We're starting to see it already. That's great for Bitcoin. There's also strong correlation with Ethereum. I mean, extremely strong correlation. So that is a good sign for risk on assets, like DeepIn, for example. Let's talk about a couple of DeepIn projects. We had this update from Aukey today. They've got robots in the grocery store, stocking shelves. Pretty cool stuff, man. They have their own grocery store mock-up in their office there. So they're doing some really cool stuff. They're already working with a lot of grocery chains with their existing Cactus product. Now they're integrating robots. One of the things they said here is, this is a live deployment in Beijing, one of several dozen that they have deployed. We're going to move hundreds of robots in 2026 and then thousands in 2027 of these and expand their capabilities. So Aukey, man, woof, tell you what, sitting at just over a penny. So this thing, what was the all-time high here? Let's just look here. This thing got up to about 5.7 cents. Hasn't really had a big run yet. And they're shipping, and they've got real revenue coming through, man. So robotics. Helium House on Abu Dhabi. Guys, Helium making waves. They had a big announcement today. They are expanding into Brazil. 40,000 access points across the country will be added. Massive. Absolutely massive. Obviously, they're already expanding into Mexico. They have AT&T here in the U.S. I covered yesterday that they are going to be testing all hotspot locations in the U.S. with AT&T for a 2-week trial period to help better gauge which locations are going to be best for AT&T. Nick from Blockworks posted this earlier. He said, no comment. Look at the revenue trends here. The network revenue burn by organization. Obviously, Helium Mobile revenue is on the rise. Love to see it. Token burns, man, have been absolutely moving up in a big way. By the way, follow Blockworks. Solid account. They do a lot of great analysis on DeepIn. Helium's sitting at $1.86 right now. So not the prettiest in the world, but given where the market's been, they've got a lot of catalysts. They're doing open market buys and burns. It's likely they'll have a digital asset treasury launch at some point. I want to call attention to Fractals. So they are tokenizing deployments, DeepIn deployments. So on one end, if you're a deployer, you can get, it helps you raise capital and expand. If you're an investor, you can invest in locations without having to get hands-on in those locations. I think it's a fantastic model. Eventually, they're going to get to a point where if you have fractional ownership, you'll be able to sell that on the secondary market. So, if you buy during a bear market period and all of a sudden those, the market goes crazy and your yield on those locations goes up exponentially, you can actually sell that in the secondary market. So I think there's a lot of ways this can go. they're working with Solana, and a lot of Deepin projects being built on Solana, obviously. If you go to their website, you'll see here, they're currently working with XNet. Also got GeoNet in there, Helium. And I know they are in talks with Hivemapper about getting them onboarded, also created some token splitting tools. So that would be pretty freaking cool. I think they will be adding a lot of different Deepin projects. I actually had them on my space. Was that a few weeks ago? Not that long. Feels like a long time ago. Man, a lot's been happening. But highly encourage you guys to listen to that. They shared some serious alpha on there. And coming up, guys, Tuesday, I will be on the Deepin Coffee Hour again. We're going to be talking about decentralized GPU projects, making a case for those and highlighting a handful of them as well. Revenue metrics, which ones I think are primed for a bounce back. So that'll be a great discussion. That'll be early Tuesday morning. Then later on Tuesday, we're going to have Silencio Network on with their CEO, Thomas. So they've been making waves, man. They have kind of pivoted a bit to doing voice training data for AI models, and they have some real customers. So they've got some really cool campaigns in their app running right now. So if you have the app, check it out. If you don't have that, download it and check it out. Ex Machina, next Thursday, I'm going to have them on. We're going to do a video interview. I've covered Ex Machina quite a bit recently. Absolutely crushing it. Pooling capital to invest in robotics companies. So, dude, that is a solid project. We are possibly going to be also having OpenMind on and Prisma X. Both of those should be on your radar. I haven't covered them at length yet, but there are two that I'm going to be doing adequate research on in the coming days for sure. I'll cover on my live stream, but I believe we'll get all three on next Thursday. So that'd be exciting. It's a big week next week, guys. Today we had Deepin Deploy in Abu Dhabi. So that's freaking awesome out at Solana Breakpoint there. Guys, there's a lot of speakers, man. A lot of the projects we cover. You got IONET in there, Aether, Filecoin, Helium, GeoNet, our boy Mike Horton. You go down the list. Akash Network, Greg's in there. I'm talking to him about getting him on in January for an interview. WeatherXM. I've been talking to them as well about getting them on for an interview. I need to follow up with them. Oh, even Dima's there, huh? Interesting. So you name it, they're there. They're all there. All the Deepin projects seem to be there. And guys, we are just 5 hours away from Breakpoint. I highly encourage, once they post their different presentations, check out the Deepin ones, man. There are going to be some hidden gems in there for sure. I know Ariel is going to be sitting down tomorrow at Breakpoint. So very exciting stuff, guys. Let's go. Woo! That's what I got for you guys today. I'm going to be, from the stream last night and this stream, I'm going to be cutting out a lot of different clips. I'll be posting them to X, posting them generally to YouTube as well. Make sure you follow me on both platforms if you don't already. If you could like and retweet this, that would be great to spread the word. And with that said, appreciate all you guys. I will see you next time. Peace.